As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Okay guys, welcome to Stocksnipertrading. This is our weekly webinar, and on tonight's webinar we're going to do the sniper trap and gap strategy. Okay, so this is like a basic strategy, but it's good to so this is like and identify it when you're trading, because it will help you get into trades that have a higher probability of getting you consistent profits, but it also teaches patience and discipline, where you're not getting in on impulse breaks and things like that. Kind of teaches you to be more patient and wait for the setup. And these can be applied to all different time frames. So whether you are a higher time frame trader on daily candlesticks, 4 hour, hourly, and then once you get into intraday scalping, you can use the strategy on 1 hour candles, 30-minute candles. You can use it on 15, 5-minute, 1-minute candles, okay? All the candlesticks have the same characteristics. So if you've been following our tutorials from the course 1, you understand that they all have a open, close, a high, and a low, and it doesn't matter what time frame you're on. Right now on our screen, we're looking at gold, XAU USD on the daily time frame. So this was from our Sunday night forecast last night that we did. So right here, this is when we were on the call, this candle actually right here. So when it was coming down right here, we started to end the call here, but this was a bearish daily candle testing this area right here, this daily support, and it broke down. And it came all the way down to today's low, hit 1741.42, and then it went down there and it started to get a rejection wick on the daily, and gold came up bullish. So this is where it is right now. But we had this area kind of trapped down here, and we were waiting for either the break above here or the breakdown down there. During the call last night, we got the breakdown, and then you see as it was coming up bullish, we got the breakout above here, above 1752, and that's what caused it to go up to here. So also when we're looking at this, we're looking over here. Here was a daily. This is kind of like a trap and gap. What we're trying to do, the idea behind this strategy is you are trying to trap the volume, and the candles basically will show you the range where the bodies are. And if you want, I'll show you 2 styles of doing this. You can catch everything, the entire range with the wicks, or you can just catch the volume. And then what the ranges will represent are the impulse breaks, or maybe how high the price can go if we continue to move in that direction. But right here, this was like a daily trap and gap on gold. So you can see how it started right here. The volume is inside here. On this day, September 8, we had gold breakout of here, made a high up here, and we have a low over here. I'll get rid of this so we can see here the prices. So it made a high of 1801 and a low of 1782. Big range on the daily on gold on that candle, but the volume finished bearish inside here. And then the following day, we opened, we came back down here, the buyers pushed it up, came all the way up here, and sellers pushed it down, where it closed again inside here. So if you see this like in 2 days, what you can do is you can start to identify what's going on here between these 2 candles, the volume. Okay, and if you want, you can tighten it up a little bit, like up to here, and you can see you have now all of the volume within those 2 days. So now you can extend this, and what we're looking for is in the next day, we're looking for volume to break out of this area or break down. But these are daily candles. So remember, these are if you're swing position trading for multiple days, you're waiting for these candles to close. Like here, how we had the daily candle of gold close right now, and then now that we're getting a little continuation candle right now. So if I was trading daily candles, looking to hold gold for long period of time, couple days, maybe a week, swing position trading, I would be following each daily candle close, see where the volumes close at. So with this one, you have the volume come down and close below. But your next day, it opens here and then drops even further. So you could have pushed this down. You could have taken that. The volume closed below, but then came back inside the box. So what we're looking for now is a kind of breakout. But when you're trading daily candles, it's very hard to get retest candles on the daily because you have to wait for the entire day. So sometimes when you're trading daily candles, you're looking for daily breakouts. And then you can go to a lower time frame. You can start to go now when you anticipate this breakout, like last night on gold, when we anticipated the breakdown down here, instead of sitting on your daily candle, you can move to a lower time frame to start scalping it, to get into trading it. You can drop to a 4 hour. You can start to see the 4 hour breakdown. You can drop down to the hour. You can start to see the hourly candles breaking down. You can drop it down to the 15-minute, the 5-minute, and you can get precise entries. But your daily candle will always be used as higher time frame support or resistance. So if you're in the trade, maybe to hold it longer and continue the trend. So if we were to look at like US 30 today, let me just pull up US 30 for us. So this was US 30, okay? So on last night's call, see these candles in here? We had these candles trapped in here, okay? We started to see how they were forming. So I kind of had a trap box like this. And we started to see what was happening with US 30 on the daily, okay? It was coming down bearish. This was the resistance up here. And it started to come down, but price needed to cool off. Why is it cooling off? What's going on in here? This is the accumulation distribution area, okay? This is where market makers are fulfilling contracts, buying, selling. They're keeping the orders tight because there is gonna be a breakout bullish or bearish, or it's gonna continue just trading sideways and they're gonna keep accumulating. It's not gonna trade sideways forever. There is going to be a point in time where it's going to either break down or break out. There's only 3 directions where price action can move. So if we can trap the price inside here, then we have a good probability that we know that it's either going to break out bullish with confirmation or it'll break down bearish with confirmation. And we can identify this on any time frame. Like I'll get into 5 minutes. I'll show you the trapping gap on 5 minutes. I'll show you how it looks like on 15 minutes. I'll show you how it looks like on hourlies. It all depends on what type of trader you want to be. But this is pretty much the basics of what it is. We're trapping it. And what we're looking for is volume to either close above this area, and we're looking for a retest and then the extension. Here, you start to see US 30 on right here on September 17, we closed below the area, okay? So this is the continuation candle. This is the retest candle, confirmation candle. What we're looking for is initially, we're looking when it opens, we're looking either, we're gonna look for buyers to push it up. Okay, we might get buyers, volume, buying volume. And then what we're looking for is to get it rejected either here or somewhere in this box, which is lower than this wick. So it's a lower high. And then we can start to get more selling pressure. And then as this candle is coming down and we break the lows of these candles, you're going to start to see the bearish momentum. And this was today's candle. US 30 was just in a free fall today. It was breaking all levels of previous daily support behind us. That's why on last night's call, we identified all this, where it could come down to. And look at where it came down to. This wick right here, 33,730, it actually broke below that, okay? So it dropped all the way down to 33,600 whole numbers, guys, 600, 700, 800. It's gravitated towards those numbers. And then buying at the end of the day, there was some nice buying. It ran up quite a bit from 600 to 900. It ran up 300 and almost 30 pips at the end of the day. Like that was a big, big rally. So what they did was they rejected it down here and they brought it up. So that's a big daily rejection. So it really was bleeding today. But what we're going to see now, tonight, following, and going into tomorrow, here's now our new daily candle on US 30. So it's a little small doji. Is it going to go bullish and come back up and fill here? Or is it just going to be come up a little bit and then selling pressure is going to push it back down and we fill this wick and continue to go down? But that's what we're going to get into when we go do our Zoom live trading after, okay? But do you see how the trapping gap here on the daily showed us that this thing was breaking down? And then inside here, I basically know the range of the candles. So when I'm scalping inside here, I know at 34,960 is the resistance, and I know down here 34,600 is the support level. So I know, like trading 5-minute candles inside, if I ever get some breaks above these or below these areas, that's where the big pips are going to be. But inside here, it's a big range. We can be scalping inside there. But if you're a daily trader, and what you could do is you could just trap these and then wait for your breaks, and you can catch a ton of pips. Like today's break, just on that candle alone, it dropped almost 1,000 pips, guys. Okay, 1,000 pips down and 300 pips going back up. Okay, so it was a monster day. That's this big candle was brewing from all of this accumulation distribution, and it pretty much, you could see it coming down from up here. That was the resistance. Then we had a lower high. We have a downtrend. We have a bear flag forming. It's got a high probability of continuing to the downside. We just need to wait for that confirmation. That volume close below there gave us that added confirmation. Get into a sell, place your stop loss accordingly up here, above that wick or above the box, depending on how much risk you're trying to take. But you don't have to go that wide. You could keep it a little tighter. As soon as you catch the fall and then it starts breaking down, that's it. It's in a free fall. Then you can take your stop loss, put it at break even, and run this. We gave a trade idea last night on the 15-minute at 34228. We gave that break when it broke 228, like right around here. That's when we grabbed all of that big play coming down. So this is daily, guys. So what I'm going to do is, what we do is we scalp. Okay, so I'm going to show us this, like, to identify some 5-minute areas where trap and gap strategy works. And you kind of got to eyeball it. Okay, for the first few candles, you have to eyeball it, because they normally come after a move, whether it's going down, coming back up. The sniper trap and gap strategy is the area of consolidation. That's when price is exhausted and it's cooling off and needs time to relax, and it needs time to catch its breath before its next move. So right here, you can start to see how it's forming. Here we have a big downtrend, and there's single vertical bars coming down. Okay, when you have that, there's nothing to trap in here. It's like stairs walking down. You're creating lower lows, lower highs, lower lows, lower highs. So this was just in a free fall coming down. Here was a little bit of a trap you could have. See this green candle and this green and this red candle? Now they have some volume around the same size. Okay, so, and then once you have 2 or 3 of them, you can kind of trap them together, and then you're waiting for the next move. So if I see something like that, I could have trapped it right there. And what I was waiting for is either the break to come back up here to catch a reversal, or it's going to continue going down bearish and continue to go down. After a little bit of more consolidation, you see it trapped the price in there. We break. They tried to bring it right back into the box, but again, it didn't break. No volume above this area. So even if you have your stop loss up here, you're still safe. You're still good. You just got to allow the candlesticks, the price action, to do what it wants to do. You know, as long as it's the overall trend is bearish, it might cool off. It might try and pull back. But remember, the pullbacks are counter trading. That's to cool off the RSI, to cool off the strength, to allow a little bit of buyers to come back so that they can move the supply zones, and then they hammer it down again. So here you get the volume, bearish engulfing candle, close below. Here's a retest. See the retest candle? So when we say what is a retest, there it is. The volume closed below, and in your next candle, if you don't get in on this candle, here it is. This is your confirmation. It came all the way up bullish, but look at where it got rejected. Right here. This was the previous support of these candles in this trap. It gets rejected. Okay, so you got to go with your gut when you see something like this. You can't be second guessing yourself. Sometimes, guys, you just got to pull the trigger. When you got all this confirmation, you get into the sell, you place your stop loss up there, and you just go with it. Don't go crazy lot sizes that are gonna, if it hits your stop loss, that you're gonna be, it's gonna, like your entire rent money is gone. Don't trade like that. Just trade with micros, minis, demo until you get this strategy down, and then you feel comfortable trading with a lot size that if you risk this much, if it hits your stop loss, you're not worried. You know, it's only 1-2% risk of your account. You're not risking 25% of your account on one trade. That's why over leverage and you blow up your accounts. But if you just trade with 1-2% risk, then you're good. And then once you get into these types of trades, you're going to compound pips, compound pips, compound pips. Watch your account grow, compound. As it grows, and you'll get more comfortable with the strategy, you'll get more confidence, and then you can start to increase your lot a little bit. Okay, that all comes later on, but right now you got to learn. So see how it broke down slowly. Again, they tried to pull it back up one more time. It's a lower high, a lower high. Now we're continuing to go lower lows, and then they hammer it down. Comes all the way down there where you can take your profits, and that's a big move, guys. On US 30, that move right there in 5, 10, 15, 20, 25 minutes, it's just going straight down, okay? 25 minutes, guys, like you're done trading for the entire day right there. How many pips is that? 140 pips, you know, just like that, okay? And then what do we see over here, okay? So see how now it comes right back up, it rotates back up, it pulls back, okay? So consolidation comes after moves. Here's your push down. It was originally over here, okay? So you had our push down, the cool off, consolidation, trap it, and then continue going down. And then at the bottom, we start to catch a little bit of support. It pulls back up. If you're not counter trading, you're just watching what the price action is doing. So then I start to see a green, a red candle, green, and red candle, green, all barcode action. So what I could do is, if I don't feel comfortable trading all this, I'm identifying it, I see something, and now I can trap that in. And you can either trap it like this. Okay, so this is where this is all personal preference now. Okay, so I could trap it like this. I'm getting that green, red, that green candle, red candle, and this green candle breaks out. Okay, so that's an impulse breakout now. But if you're not taking the impulse candle, you wait for it to close. We watch what happens. It closes. So this would be now my retest confirmation candle. It opens red. Okay. So it opens red, it doesn't go up. So we can't get into a buy. There's nothing, we're not buying. The candle tells us what's going on here. It opens red, and then right away it goes down bearish. It's coming down. So how can we enter into a buy? It just, if we're waiting for our candles, look at the candles, okay? The green candle came out, yes, we wait for it to close, it broke out, okay? So, but what we're waiting for is the continuation candle. If this opened up green, and continue to go up, that's a different story. Okay, then we're continuing off of this. But this candle opened red. There was absolutely no buying pressure because the sellers had all control and they pushed it down. So now we're just waiting again. I'm waiting now to see if this bearish candle will break and close below here. Then maybe I could get into a sell now. But it closes again, it's in the box. Next candle, again, impulse break, close in. Next candle, small doji, impulse breakout, close in. Next one, doji, impulse, close in. Next one, spin top, again. Look at all these impulse candles. These guys, the US 30, I guarantee you, was just sucking in retail buyers in here on all of these candles. They think that it's going to go up, they're buying, and then they just continue to get hammered down. This was an overall downtrend on US 30. So like I say, if you don't feel comfortable doing the counter trades, don't counter trade. Trade with the trend. The trend is your friend. Just trap this volume, and then you're waiting for the next break. So here it is. This candle at 205 today. If you were trading in the afternoon, this candle came down. The volume closes below our key area. Okay. That's step one. There's the break. Now our next candle, this is our retest confirmation candles. Not all candles come all the way back up to test this area. Some candles will just continue going bearish and just continue dumping down, depending on how the pressure is coming from a higher time frame, like our 15, 30, or 1 hour candle. But here you can see the wick comes up to here. That was green bullish momentum coming up. This was a green candle, open up and come up to there, but selling pressure right away at the wick, start to bring it down. As soon as it breaks the low of the previous candle, then you can look left as well. There was previous support right there. Not only does our candle continue to go down, we could get into a sell right there on this candle. Anywhere on that candle, you can get into a sell. Where do you place your stop loss? Okay, so if you don't want to place your stop loss all the way up there above the box, then what you would do is you would kind of get 50% of the bearish candle, okay? Because you want to be behind that selling pressure. So if you don't want to keep your stop loss all the way up there above the box, then put it like 50% of that bearish candle so that you still have this selling pressure still on your side. But ideally, you want to keep it above the consolidation box. And sometimes if you have like a wick up there, maybe just above that wick to avoid a fake out. But everybody's got different account sizes, different account risk management, and things like that. But that's ideally what you want to do. And then now we're riding this red candle down. So, and then now we're getting extra, we're looking left. Here was previous support here. And what happens? Our candle closes with volume down below it. So that's good. That's continued pressure going down. We have another pullback candle. It's a green candle, but look at it. It comes right back up here. It's still like a lower high, and we're still safe with our stop loss. So you got to allow the price action to do what it wants to do. This could be another area, just a three bar pattern of some consolidation right in here. Like right here, you got that. Those three candles right there. Like that's kind of like a trapping gap. So we're waiting for, this is called a 3-bar play. Okay, I'll teach you guys about 3-bar plays where you get a red candle, you get a pause candle, then you get the continuation. And these, I know a lot of people that make a living off of just identifying these three candles. These are called 3-bar candles. It's I'll teach you all about these, but what you're looking for is the continued downtrend, the pause, and then continued downtrend. And here it is, you trap it, and then it goes again. Then it's following all the way down. Then you get into your profits. And this is what we're looking for. We're looking for a lot of these areas of consolidation. You can, and then here, you're starting to get now the breakout. This was at the end of the day. This was the bullish breakout. But you see how there's nothing to trap in here because they're just candles, individual candles continuing going higher and higher, higher highs and higher lows. This is the 3-bar pattern right in here. You get a candle with the pause in between, and then it continues going in the original direction. So there it is. You kind of get the bullish play. This is like the bullish pennant, bullish flag pattern where it continues. It has a higher probability. We get a little bit of a breakout, closes back in, and then we get our breakout candle going above there and continuing the action. So like up here too, this is now trading the Tokyo session, but you see like when it came down here, we can kind of trap those candles and then there's a breakout. But this is at the, right now, this is Tokyo session, but if we go more into trading like normal times, I can show you like, let's go to maybe London Tokyo session over here. Let's take a look. And sometimes the candles won't always present themselves with nice bodies and things like that. They might be very choppy like this, okay? They might be very, very choppy. If you start to identify the chop, you can always trap the choppiness, like in here. So I start to see this forming in here. This is like after midnight, but these are 5-minute candles, right? So you're gonna get a lot of these. If you're patient and you're disciplined, then, you know, if you don't feel comfortable trading these, then what you can do is just trap them like that. And then you wait. I like to identify the range. Okay, I always see the range. If it's only like a 10, 15 pip range, then, you know, minus my spread and commissions and things, whatever you're trading, is it really worth taking those trades inside here if you're going to get a red candle, green candle, red candle, green, and there's absolutely no direction, you know, unless you're trading for 5, 10 pips, which a lot of people do, you know, you can do that. But a lot of traders are waiting for the bigger play, and the bigger play will either be the breakout or the breakdown. And when you start to identify this, there's 2 things that you can do. You can get the entire range, like including the wicks, but what you're doing is now you're opening up the area. So then you're allowing for more consolidation. You've opened up the range, but still there will be a breakout up here and there will be a breakdown down here. But that's just all personal preference if you want to get the entire range. If not, you kind of get the bodies like right in there. And then these wicks will represent an impulse breakout and come back in, impulse break and come back in. Okay. And then what we can do is we can identify the highs up there. I know that's where the impulse break was. And then I'm still following. I'm looking for that volume to close. I had nothing close above here. Oh, and there's my first candle at 2:05 a.m. So this is like pre-London, 1 hour before London session. We get some volume close below, and look at now. So our next candle, here's our retest candle. It comes up, and look at it touches right there. We could go into a sell as soon as it touches that area, place our stop loss above our consolidation trapping gap area, and also maybe above these two wicks to avoid maybe another wick fake out. So I'm protected up there. That's a nice supply zone. So I'm protected by supply up there. So I'm a seller. So I want supply. I want to be in there. And now I'm pushing these candles down a little bit. So this doji candle came right here and got rejected. Next candle again. So this one took 2 rejections. This one was another green. Sometimes it takes 3, 4, 5, 6 times. But as long as it keeps getting rejected there, and then we can get some bearish volume, continue to make some lower lows and lower highs, then we could break down structure. Okay. And then when we start to break down, what we're looking for is to break previous support levels. So that's why, guys, we're always looking at supports. Candles, price action will make a support level, and you can visually see it. Like right here, I can see it forming with this red candle and this green candle right away. This candle came all the way down here. There's the wick, and then it closed right here. Next candle went down, went up, and closed right at that line again. So here was my first candle right here at 2:30. Now I see that it closed below the red line, and look, here's a retest candle right there. Okay, so you can start to see it came up, and what does it do? It touches our red line. Red line was support here, but now volume is below it. So this red line now is resistance. And now we get that nice big momentum push down right there. So, and this was all identified by identifying an area that you can trap. And then you see the direction going down. And then it continues to make lower lows, a lower high, lower low, and lower highs. Look at it again. So throughout the day, they attempted to get back up above this area. Okay, so you can see that this is a resistance area, a supply area now. Multiple touches up here. This now is like a supply area. So this whole area going forward is supply. I can use this going all the way throughout entire, and then see it just continuing to break down. So it breaks down. We get some more like consolidation. See all these candles with these wicks and pin bars and all over the place. It's very difficult to trade these. They're very, very difficult to scalp these, but it's easy to maybe spot these. And if you see them, maybe look for more of full body candles that you can kind of trap. Things like this, like you want to trap these candles. If I grab those, and guys, people make a living off of just trading like this, okay? It's a very basic, easy, straightforward way to trade, okay? It just requires patience. If you guys are patient, you guys will make a ton of money in these markets, okay? Believe us, believe us. There's no rush, guys. 24/7 trading. Look for your plays, guys. Look for your plays. We got guys on the team hitting 10 out of 10 on their trades, 20 out of 20, 50 out of 50. Like they're just waiting for these types of plays. They're placing a proper stop in their account, and then they're getting in. They're patient. They wait. They get the breakout. They don't get too greedy. If they go up 10, 20, 30, 40 pips, whatever it is, they scale out. They keep compounding their accounts. But if you get the real structure breakdowns where you get a daily candle breaking down a 4-hour hourly, and if you're in the 5 minutes, you're loving it. Like today, if you were in a US sell, you were loving life today. It just kept coming down. Every pullback was just getting selling pressure until the end of the day. That's why power hour, we called it. Was it going to be a power hour or a continued power dump? And it reversed at the end of the day. We got a nice 300 pip reversal at the end of the day. And see here, like right here, this, if you're not in the trade, okay, so if I just started to trade right now, I'm just looking what's going on in here, I start to see this type of pattern, okay, the overall pattern is bearish, it's making lower highs, lower lows, I did my top down, so what I'm trying to do is, I'm trying to look for the candlesticks that I like, that I can see some type of like little consolidation right there. What is this? This is our 3-bar play. Guys, people make living. They're retired just by watching these 3 candles. They look for a bearish candle come down, a green pause candle, and then they look for the extension right there. There it is. There's our break. Okay. And if you miss this entire red candle. I know it's a big red candle. If you're always saying, okay, we should be waiting for a retest. Okay, so you wait for this entire candle to close. I know it's hard to watch if you're just waiting for that. You want to get in, but if you still follow technicals and fundamentals, look at the next candle. This is our retest. It was a bullish candle, came all the way up here, and started to get rejected right here. You see it's below here still, and they hold it, they hold it, they hold it, and then it continues to go down, okay? So you could get into like a sell up here, put your stop loss up there, and then you ride this momentum down. Here's another, see where it comes down to reach a level of support down here. Now it really dumped. You could be looking on your daily now, and it's reaching a daily support level down here. It's already had a massive drop. See my candles in here? They're all about the same range. If I don't feel comfortable trading these, I'm going to allow the volume to accumulate, and I'm going to try and grab the breakout, which is trap these candles. Okay. Trap them. See how I trapped all of the volume? And now what I'm waiting for is a candle breakout, okay? And then get above those wicks and it can continue. So this is when you're learning how to trade impulse candles, when to take an impulse candle, things like that. It will come with more practice, okay? First, learn how to do retest confirmation, master that. Then later on, you can start to learn how to do impulse candles. They come with context behind them. Do we see, like maybe we see bullish divergence here. It's reaching a daily support level. We have a lot of factors coming in. This thing is like RSI is down to 10, 15, 20, 25. We know it's in an oversold condition. We had a little bit of accumulation, and now we start to get a nice big bullish candle breaking out of all these wicks. We could go into a buy here when it clears these wicks, stop loss placed below there. But that's if you want to ride that impulse candle. But again, if you don't get in on that, what you're doing is you're waiting for the next candle. Here's our retest. It comes down to there and then pushes up. So when it comes down, that's all of a retest you're getting. It doesn't come all the way down to test our area. So if I go into a buy, I get into a buy there, and where do I place my stop loss? It's pretty much like all the time. I get into a buy there. Oops, the wrong one. We're going long here. Get into a buy here. And then my stop loss, again, it can be right below here where the breakout wicks were. Remember here, this was a previous resistance, these wicks. Now it should act as support. If you want to keep it just below there, that's like really tight, okay? That's a tight stop loss. You're underneath these wicks, or you can go below the trap and gap box, okay? It all depends on your risk. But when we get into a trade, remember, you're not risking your entire account on a trade. You're risking 1% to 2% risk. So when it starts to move up, look at this one. It pulled back, but 2 candles pulled back right here to this previous wick line. This was resistance. Now it's support. If I have my stop loss in here, yeah, it did scale back a little bit from where I originally bought in right here, but my stop loss, you have to allow trades to breathe, guys. Not always are you going to get into a trade and then it's just going to go bullish 10, 20, 30 pips. Okay, it's great when it does that. You know, we love life when it does that, but the probability of that happening is not always going to happen. It might scale back, but then it needs to test this area. It could have even came down and tested this area before it really went up. Okay, remember, this is a counter trade. So, but we come down and it didn't break down. We picked up more volume, That allowed that big push up at the end of the day. So if I had my stop loss there, I'm still safe. What I could do, like on this candle, when it starts to go up 10, 20, 30, 40, 50, 60 pips, take your stop loss, reduce risk, put it right there. And then eventually you get it to break even and then look at the run up. And then you could either scale out as much as you want. You can take like this is a big move on US 30, but at the end of the day, it's up to you guys to scale out whatever profit you enjoy, but leave maybe a little runner, 10, 20% a runner, and just in case this continues to make some higher highs and higher lows, or you can scale out your entire position, whatever you like. And then we're looking for these areas again. See, like here, we start to see, we don't have a consolidation. We don't have a trapping gap here. It's single bars coming down. They're stairs, lower lows, lower highs, lower lows. And then we start to come in this area, okay? So we start to see the price cool off. I start to see that 3-bar pattern I like, trap it, and then what we're doing is we're waiting for the extension. Here was another one right in there, trap it, and we look for an extension. We could do this all day, every day on any pair that you trade, like right up here. Okay, so you see those choppy candles? Nobody on this planet can trade these candles. Like, just look at them. How do you trade these? You know how you trade these? You do this. Get your rectangle box and trap them. Okay, and it's up to you. Do you want to trap it real tight like that? Or do you want to maybe give it a little bit of room to breathe in there, you know? And then what you're doing is, I'm watching up here. I'm not taking every single impulse candle, because remember, I know the overall bias momentum is bearish on US 30. So for me to take a buy and counter trade, I got to have a lot of volume to take a buy. My bias is I'm looking to short. I'm looking for continued short sells. I'm looking for price to cool off and then selling pressure to increase. Price to cool off, selling to increase. So what I could do is I trap those in. There was my first volume candle break. It was a big one come down, okay? But if we miss it, because we're waiting for candles to close, then we're waiting for this entire candle to close. Our next candle, we're waiting for the pushback, the pull-up, okay? Either it's going to continue going down red and continue go down, or there's going to be a pullback. It pulled back up to here and got rejected. This wick is a lower high from where it all started. I can start to see there's a downtrend forming, coming down, start to see you got a triangle break right there, and then this is our continuation candle. So if we hit the sell, like let's say right around here when it starts to break down, you get into a sell, where do you place your stop loss? Okay, this is a big range. You don't want to place it that high, you know. So where can we go? Maybe we want to be, number one, above the previous wick. Maybe you want to be somewhere inside the box here and you're still below the trend line. And then as it continues to go down, it's making lower lows, lower highs. You can bring your stop loss now, half risk. Eventually, hopefully you can get it down to zero risk, and then your all-in profits, you can scale out 50, 60, 70% whenever you want. Like up until this pause, that drop from there, not including this big red bearish candle, just you sold the continuation, there to there, you're talking 50, 60 pips, okay? That's great, 50, 60 pips. And then what do we identify? Look at, you have single candles coming down. Oh, there's one candle, a pause candle, and a red candle. Look at the shape of them. Why don't we trap those? We can trap those. Just wait patiently. And what happens? There's our 3-bar pattern. Okay, you can get these bullish or bearish, and they're continuations. There was that little pause. This one sucked in a lot of retailers on the pullback, thinking that it's going to continue to go up, reverse, but US 30 was saying, we're going bearish today. We're going to be dropping. So if you want to pull back, you got to be careful being a buyer today until the end of the day, because they kept hammering you down. Yeah, if you're scalping inside, you can grab 5, 10 pips, but you have to understand that that's all you're getting. So you got to get in, get out, get your pips, and then follow the original trend. Here it comes down. We close with the volume. Here's another retest candle below, and here's another 3-bar pattern right there. You see, it takes a while before it really breaks the structure, but I could trap like those in, and I'm still waiting. And then I start to see another breakdown. There it goes, there it goes, there it goes. What's this? Another 3-bar pattern. Look at, I trapped the volume. Guys, this is, see, I'm just trapping in here. And then I get the middle candle. I get the volume inside there. And then I watch the extension, and there it goes. And then there's your big drop right in here. Again, you can trap these candles in here if you like. Those ones in there. And you can either get it there or there, depending on what you want to do. And this was just the bullish breakout. That's all they gave us today. Like, that's all they gave us. That's it. But still, if you're doing that, you get some volume close above. Here's your retest candle. It came down and went up. You could get into a buy here, stop loss place below there. But that's all the pips you're getting on a retest today. There to there. It's 27 total. The body's 20. 20 to 25. So that's not bad, but you're in and you're out, okay? Because we're not getting any real big momentum going up, okay? It was just constantly breaking down today on US 30. And we can do this on all time frames. So this was, guys, this was 5-minute candles. Okay, not everybody wants to trade 5-minute candles. Maybe there is some hourly traders out there. Okay, hourly is a very common time frame to trade. So what you're doing on hourly candles is you want to start to identify areas where you see like small hourly candles consolidating in a range off of like here. Okay, so I can see it right here. See the downtrend, we get a pause and then the move up, pause, move down. So when I see these, I can trap these areas on the hourly. When it's coming up here, I can start to see when they start getting tight, they start coiling. Okay, that's what you're looking for. You're looking for tight candles, like the same body size in here. You could look for something like this. And then I'm identifying these ones inside here. And then this was the big fake out. Okay, this was a huge fake out. This was we were trading this one night. This was the big fake out candle. They pinned it like it was going to go up, and then they brought it down. As it's breaking down, it's coming down. But when you're trading hourly candles, you have to be very, very, very patient with these trapping gaps on hourly candles, because you're waiting. So that's why they work a little bit better with like smaller time frame candles. You can really get into some trades instead of waiting hourly and hourly. This is the 15-minute. Okay, see the 15 minutes, you can look for multiple attempts on the 15 minutes, but you got to find when price is cooling off. You have to you got to know that it comes down, it'll go up, but eventually price will cool off at some point. So it's just with our naked eye, we have to start to identify this, and we can trap it. But these don't always work. Okay, so don't just look for this type of trading. If it presents itself to you and you start to see the price action cooling off and trading sideways, then what you can do is you can trap it, and then it will help you get into anticipate the next direction. But there is some traders that just look all day just for these types of patterns. You don't need to do that. They will come naturally to you as you're trading. See, like right now, we're breaking out on the US 30. It's breaking out bullish right now. Okay, so down here, you see this red candle, green candle, red candle, how they were the same shape. We could have trapped those in there, and then you're waiting. There's your breakout. Okay, that's your impulse break. And then we've got resistance right here. So that was the impulse break. This is the continuation candle. Okay, so it didn't come down to retest this area. It just continued to go up, Here again, 3-bar pattern, green, red, green. You can see that all the volume was contained in there, and then they just pushed it out again. Okay, so we could get a continue to go up. We might get some, it could come up to here. And then what we could see is maybe the price is going to start to consolidate up here. And then what I'm looking for is, before it even happens, like I'm anticipating what will happen. Maybe price is going to come inside this box. It might come in like this. Maybe it's going to cool off a little bit in here. And then we're looking for the breakout up there and continue to go up there. However, if this is going to start to pull back, then maybe when it's coming in there, it's going to start to break, maybe a retest up here, get rejected, and then it's going to come down to here, and then maybe break down further. And this area was a previous area of consolidation. What I could do is I could carry this forward, this box over there. So do you see how I'm kind of now, I can move this over. So when price comes back down here, I'm expecting to have buyers up here and continue to push this. But if volume breaks below here, then I could be getting into a sell. Where could it go down to? This is the next area it's going to go down to. See how I have my chart set up? This was the area below us. That was the trap. And that's where price could eventually go if US 30 retraces back tonight. So I'm kind of setting up my chart where I could potentially take some buys and sells and things like that before the price even gets in there. Okay, this is what it is to be a price action trader. We see what happened in the past. I see what's happening in the present right now. So I'm kind of anticipating what's going to happen in the future. This is what's going through my head, the psychology. I'm trying to see how far is this play going to get overextended? Where am I going to start to see some consolidation? Is it going to cool off and break out further? Or is it going to start to get rejected and possibly come down to this area? If it is going to get rejected, come down, I could possibly maybe get into a sell and I could short it down a little bit for 5, 10, 20, 30 pips. And then maybe we can go from there and we'll watch what this is doing. But this is live right now. So you see how you can trap it down here. you can kind of trap it right here. And then I'm waiting to see where these candles will go before I can trap it again up here. Okay, guys. What time is it? It's 8:15, guys. Do you guys have any questions about this? Okay. You guys are welcome to unmute your mics, ask some questions, or in the chat, whatever you guys want, on the sniper trap and gap strategy. Do you guys have any specific questions on this that I can answer for you guys?
I don't have any questions. Good evening, everyone.
Janelle, how are you, brother? Thank you for joining the team. We appreciate you, boss. Thank you.
No problem, man. I was anticipating joining this team, but I actually took that trade while you were teaching us.
Yeah, a lot of guys do. A lot of guys do on these webinars. I kind of set it up and then they're telling me they're secretly trading, but it's all good. It's all good, you know?
Yeah.
So yeah, but do you understand like the psychology that went behind that trade? Why it continued to go up bullish like that?
Yes, I do actually. I do.
Good.
Just trying to make sure I understand that not all the time you're going to get that pullback.
No, not all the time. So that's the thing. Like when we do identify this, it's nice. You know, it kind of gives us, I love to see a consolidation. I love to trap price because I know in 5, 10, 15, 20, 30 minutes, I know that price is either going to break out or break down. I know that I'm going to get 10, 15, 20 pips. You know what I mean? I kind of know that. Well, otherwise price is just going to continue to trade in this box and I'm not trading it, you know, but as a Forex trader and you guys as Forex traders, we can trade 24/7 all day, every day. Why not just be patient and disciplined? Like think about it. If you go to your job, you work a 9 to 5, you work shift work, you put 8 to 10 hours in at your job. Why can't you put a couple hours into trading? 2 hours, 90 minutes, 1 hour. If you can put that into trading and you're patient and wait and you identify like a trap area, give it 15, 20 minutes, 30 minutes, whatever it does, allow it to accumulate, distribute, and you will get the push up or down. You know, there's only 3 directions price can move. That's why this is a really, really good strategy. It's easy to identify, guys. It's not that difficult. Like you just got to kind of see with the naked eye where price is kind of cooling off, and it can help you guys like that.
Definitely appreciate it, man. Truly
yeah, no worries, no worries. And then also when you're in a trade, don't get too greedy because it could come up, it could come back down. That's what scalping is. If you get a good amount, 10, 20, 30 pips that you're happy with, secure maybe 70% of it. And then leave maybe 20, 30% as a runner with a break-even stop loss, because you know when these things run, like today, if you left a runner on the US 30 sell, like you just continue to grab profits on the way down. But sometimes it doesn't work like that. Today, we anticipated the market sell-off. We did our Sunday night analysis. We saw that the US dollar was very, very bullish last night, and it continued to push. So that's why everything dropped today. Everything was correlated with the US dollar. Whatever you're trading, US 30, NASDAQ broke, gold broke a little bit when we were trading at the Sunday night, and like GBP USD, Euro USD, GJ, everything was like pretty much bearish today. We'll see tomorrow how things react tomorrow. So that's why scalping is nice. You can get in, get out, get your pips, you know, and then if you just set a proper stop loss, you're never going to blow your accounts, guys. The only way you blow accounts is if you're trading with no stop loss and you're over leveraging your account. You're using lots that you should not be using in account. If I have $1,000 account, I can't be trading with standard lots, okay? Because if you take a 20 pip loss, you just lost $200. You just lost 20% of your entire account. You're asking for trouble. You know, you gotta, guys, have to trade smart. That's what we're seeing here. A lot of guys are coming here, they've been told to trade with no stop losses. They're coming from copy paste groups where they give them 100 pip stop loss, and then they tell, like me, I tell you to sell here, and then I'm going to say set your stop loss 100 pips above. Like what the hell is that? You know, like that's not a trade idea. That's just stupid. Like I can hit my button right now blind, hit a sell and put 100 pip stop loss and just hope for the best. but that's reckless to be trading like that. You want to trade with technicals, guys. These candle patterns tell us everything. They're attracted to a price level because at these prices, market makers have their orders, they got their supply, they got their demand. It's up to us to identify these areas. A lot of these areas run off of psychological numbers, whole numbers. Today, when we hit that daily low of 33,600, when we hit down there, that's where we had the bounce, like down here. It was a really nice end of the day bounce. But just like right now we're seeing that we could be getting bullish momentum. Like right now, we're getting higher highs, a little bit of a cool off, higher low, push up. We might get a little bit of a scale back coming over here. And then we're going to see continuing. Are we going to continue into Tokyo, going up and continuing, breaking out? Or are they going to start to push it down again? Remember, our original bias on US 30 is bearish. So if this price, this is next level, it could come up to over here. Okay, if it gets rejected at this level or over here, it's still creating a lower high, and selling pressure will come down and push this down further. But
Ronnie.
yeah, Belle, what's going on?
Oh, hi. Hey, okay, so I'm kind of looking at this trap and gap strategy a little bit differently tonight because I never, or maybe I've just never heard you say the 3-bar action strategy. And so I've always looked for a confirmation when I do the trap and gap when I'm looking for myself. Like, do you think there's better time frames to do the 3-bar action versus
the 3-bar action is always in a trend. So if you're in a downtrend, you're looking for those 3-bar patterns to continue your trend down. If it's bullish, if it's making higher highs and higher lows, if you get that red pause candle in between 3 candles, then it's good to go. Continue the move. I'll try and show you what they just come natural. Like me to look at them, to find them, it's hard. You know, anybody can look at a chart and say, okay, I see it. But when you watch them happen natural with price action, you're like, okay, I see what's going on. I'm really getting it. So it's like a push going up, and then you'll get a red bar candle that's kind of like the same volume as the bullish candle, and then you just trap those two, and then you wait for your next bullish candle to break out. Then if you stay in the trade, you're also getting confirmation that it's breaking out after a pause candle, because sometimes those red candles, that's where sellers come in. They push it down, but it's not enough to push it down, and then it just continues. Like right here, guys, I'm just looking at this trade. See how it came up? Okay, it just continued to go up, but in here, you see all this choppy stuff. Like if you're not in a trade here, if you're not in a trade, I'm observing what happened. This is a W pattern breakout. I can see the W right there. It comes down. There's the neckline. Pretty much there's the breakout, continues to go up. And now it comes up to here, but now I start to see some consolidation. I can't trade this doji candle. I can't trade that spin top, but I start to see, like, see here, the top. I always look at volume, guys. Before I look at wicks, wicks just represent the range. Volume tells you everything, okay? That's where the time frame closed and the next time frame opened. So right here, I can start to see, set up my box. I can use that red candle right there. But if I use that red candle, I'm kind of giving away just a little bit. So what I'll do is I'll kind of open it up right there, right there. So see how I trap this? So now on our tutorials, I can't remember what course it is, but in our 20s, we have a bullish flag pattern. So this is like the rally coming off of a W pattern. Okay, we know it's a bullish rally. It comes up. Price is going to cool off. It's always going to cool off. Unless there's extreme news that's causing it just to skyrocket, that's a different story. But if we're just trading right now, this is 225. So it could be in the afternoon. You know what I mean? It could just be cooling off, but we're waiting for the extension. So these are just wick breakouts, wick breakouts, wick breakouts. We don't trade those. We wait patiently. Unless, guys, you want to get the entire range. You can do that, guys. It's all personal preference. If you want to wait a little longer, and you don't want to get sucked in by these wicks, this is another good strategy, guys, to help you not trade impulse candles. These were impulse. If I put it right here, I like to keep it tight. I'm a different trader than you guys, okay? But I should like to show you guys all different types of styles. If you're getting a lot of impulse candles and you don't know how to really trade them, then if you see a range like this, open your box right up there, get those wicks. So now you are going to be extremely patient. You're going to wait for a break above here or a break below there. Okay. If you really want to get the entire range, you could do something like that. And you're not going to take any sells until we break below there. And you're not going to take any buys until we break above there. Do you see now how I cleaned up everything? I have zero impulse here. Okay. I've cleaned up the entire range. But sometimes the range gets really large and traders like to scalp inside there. But if you want to do this, this is a good way to help avoid impulse candles. You've trapped everything in there, the impulse, everything. So what we're waiting for is this candle broke out. There's our volume. Here now is our retest. It doesn't come all the way down, but I feel confident now after all of this accumulation. If I start to do like a support line, there's my support line. So it is creating, oh, I hate when TradingView does this. It is creating a higher low from all over here. We're continuing this uptrend. Now I start to see we're starting to break up a bit. Okay, we're making higher lows, higher highs. There's my volume break above all of the impulse, everything. There's my retest candle. I could go into a buy right there, anywhere on that candle, especially guys, if it breaks the wick of the previous candle. That's telling you that the momentum is increasing. You get into a buy. Where do you place this stop loss? Okay, you're not going to place your stop loss all the way down here. Okay, so we can start right here. We can place our stop loss. Why did I identify the support level of these few candles? Because that was the support on the 5 minutes. I drew a trend line. So I also have my stop loss below a trend line and below there. So I feel safe there. If I really, really want to just extra confirmation, why not just place it below your entire box so you'll avoid a lot of wick out candles? Because a lot of times that happens, guys, where the market makers bring it down. They hit all the pending stop losses. That's what we call a stop loss hunt. They hit them all. They hit all the pending, and then it's a big rejection wick, and then you see this big green candle fly out of nowhere, and then it's all happened to us. So we're like, we knew it was going to break out, but they hit our stop loss. They manipulated it. What they do is they bring it down, they trigger all the stop losses, and then they take the market in their original direction. They pick up that liquidity. They take our liquidity, the retail money. And then here you get into the buy. As it continues to go up, okay, it gets up to, you're not getting too greedy. 1, 2, 3 candles. I'm starting to watch up there, starts to scale back. Guys, count your pip value, like from there to there, guys. That's no joke. From the top of that wick, that's 75 pips. The close of the volume is 60 pips. That's an amazing trade in 5, 10, 15 minute breakout, 15 minutes. So, and then what you can do with your stop loss is, as it's going up 10, 20, 30 pips, take your stop loss from there, reduce half your risk. If you want to keep it more to breathe, a lot of traders will put it straight at break even. That way you have absolutely zero risk. Your capital at stake is nothing. You're not going to lose anything in your account. You can feel safe taking this trade. I love getting in break-even trades. It's some of the best trades I take. I get in, I go up 10, 20 pips. I put a break even. What's the worst that's going to happen? The worst that can happen is it comes back down to break even. You didn't lose anything. But while you're up 10, 20, 30, 40, 50, 60 pips, why not scale out 70, 80% of that entire trade? That's why we trade. We trade for pips. So we're not getting too greedy. Anything above 20, 30 pips while you're scalping is a beautiful trade. Take out 70%, put that money in your pocket, put those pips, bank them, leave a small runner just in case this thing continues a rally and goes higher highs and higher lows, and you're protected. But once it comes all the way back down and it triggers your stop loss, then your runner will be gone. But a lot of guys start to scale out of their runner when they start to see it coming down. So I can start to see it's coming down here. Maybe I want to exit my entire runner right there, close the trade completely, and look for another trade. But that's the thing. What I wanted to go over, the sniper trap and gap. There's 2 ways of doing this, guys, and it's all personal preference. You can trap everything, including all the wicks, or you can keep a tighter box. But then when you use a tighter box, it requires extreme patience, because then you can't fall for these wicks. Okay, do you guys understand what I'm saying there? And then you just got to follow the momentum, and then you kind of got to judge the impulse candles. Like here, I'm getting these spin top candles. there's not going to be a big breakout off of a spin top candle because those are indecision candles. I like to see here, I've got a bullish engulfing candle, engulf all of that. Now I start to see something forming here. I'm starting to see increased volume. If I had RSI on my chart, I could be watching my RSI. Maybe it's approaching above 50. We're starting to get strength, and then I could start to see the breakout happening here. But the 3-bar pattern, guys, I'll do some webinars on the 3-bar patterns. But that's a really good strategy, guys. A lot of traders like to look for 3-bar patterns in a rally, whether it's a bearish or bullish rally, because you're looking for the rally to continue with a small pause and then continue the momentum. But it all comes natural, guys, when you start to see this price action happen. Yeah, like here's one right here. Okay, so you kind of see here's a little bit of a rally coming from down here, green candle, green candle. See this little red candle inside? So that's like a 3-bar pattern. So you can start to see the 3 candles right in there. See how they're just cooling off? That's a little cool off candle. It's a little spin top, little indecision inside here, but then the buyers will pick it right back up and continue the momentum. So that's just, you see it come up, cool off, 3-bar, and then there's your 3rd bar breaking out of there. So it's I can look on the charts and show you them, but when you start to see them happen natural, like if I go to the live trading right now, you can start to see them developing, and it's better when they're live, guys, because you can really explain what's going on. Like I can go back and show you guys, but I don't prefer doing that. I like to show you guys everything live as it's happening, really break down things. So I had my box up here. Okay, so see where it is now? I can bring it down to here. See right there. If I want to grab that wick and up here, so see how now the price is consolidating right in there inside this box. If I want to get all of those wicks, okay, I could get the entire box like that. If I want to tighten it a little bit, just get the volume like the bodies, I could go something like this. Okay, and you see how thin the volume is getting right now? So we're either going to now continue possibly to the upside. If we break above these impulse wicks right here, then US 30 could continue to go up here. If we break down, we could look to push down a little bit down here. See now how we're getting a little bit of bullish momentum, but this could be like an impulse break. What we want to do is clear these wicks up here, and this thing could go. Where could it go? We look left. Here's where it could go. Right up here, these previous wicks, it could go to that price. If it goes higher than there, it's going to come up to possibly right here. If it goes above there, it's going to come up to here. And then those could be all like my take profits going forward. There's the bullish candle. Okay, so what we're also waiting for is, can this volume close above these wicks? Then that will give us extra confirmation that volume's there. We could look for like another retest candle and continue to go up. But do you see how it kind of paused in here and it's continuing to go up? Okay, so it's riding this bullish momentum. I had it right here. I had it a little higher where I was anticipating consolidation and the breakout. I had it set up with those arrows, but I didn't know where they were going to consolidate it, but I could see what they were doing with these candles. And there it goes. So if you're in this trade, John L, you're still holding this. Congrats, brother. Just look at it. There it is. It's going to attempt to get up here. Why did I just get that red line? Because this is where price was this afternoon when we were trading it. Okay. You see, it's almost made a complete fib retracement, 100% from this swing high to swing low. It's already, look at it go. Okay. There it goes. See how it broke out of there? Just a little consolidation, and there's the breakout.
Just a profit.
yeah, in profits, guys. It's not that difficult, guys. Honestly, it just takes patience. Who doesn't want to be?
Are you gonna do this? Hi.
What's up? Hi, Sandra. How are you?
I'm fine. Are you gonna be doing this strategy live? Because I really want to see this live, because I constantly see these things like a replay, but it's completely different when you're doing it.
Are you new with us?
Yes.
There you go. You're new with us. We do this live all day, every day. This is live right now. This is live trading. This is not backtesting. We do some of the webinars to show you, but this is live trading right now.
Okay. Okay.
Yeah, but this is just the webinar. I'm gonna right after the call, guys. We're gonna do live Tokyo session in the Zoom room. So if you're still trading, join us, and we do everything live. We break down it. I love to break candle by candle. I do candle by candle analysis. I tell you guys what exactly going on. I kind of set up trade ideas where I like to see price break out, break down. You know what I mean? And you're welcome to ask questions, but we do everything live. I know. I absolutely hate when people come and they do charts from yesterday. And then it's easy to talk, you know, it's everybody does that. They'll say, okay, look at here. Yeah, I would have taken a buy there, but let's see you take a buy there live. Let's see you do that. That's what we do here at Stock Sniper Trading.
I think I got trapped right there in the trap part. That's why I lost my money.
Where, in here?
Yep, right there.
But what were you doing? You were taking a sell?
I went from $100 to 1,000.
You went from 100 to 1,000?
Yeah, and my first day trading for like a hour or two, I just kept going in and out, no stop loss, no nothing.
Oh, but you made 1,000, 100 to 1,000?
Yeah.
That's amazing.
Because I couldn't figure out how to set up the demo account because I had that account open for a while. And I was like, okay, let me just try to see what I can do today. And I just logged on and I just kept pressing nothing to go. So I thought I could do the same thing the next day.
No.
Big mistake.
Yeah. You can't do that. That's like playing the lotto. You know, you're just guessing.
Yeah, but if I would have seen it, I think I was doing it with those long candles. You know, it was like adding positions and kept getting in and out.
Yeah. So you're riding the momentum. Yeah.
But I didn't see the I wasn't looking at any graphs. I was like on the phone, the app better.
Yeah. No, we break down everything through charts and technicals and everything like that. So
that's when
you'll learn a lot with us.
When that happened.
You'll learn a lot with us, believe me. Watch the tutorials, enjoy the tutorials. They're set up from like introduction to candlestick. You got to learn what an open, high, low close is, the volume, and then you start to learn what type of candles these are. So you know what Dave and I are talking about. Once you learn price action, then you can really clean up in these markets. But you got to understand what's going on, not just candlesticks. You got to understand support and resistance. You got to understand what a supply demand zone is. You got to understand why I trapped this price. It's the accumulation distribution. So what's going on in here? You got to understand what's happening in here. It's the market makers are taking all the orders or fulfilling all the contracts in here. They're getting that volume so that it can break out. In here again, we trapped it so that they could get that volume to break it out. Look at the breakout now. So like this is going to continue to run. I'm not even using any RSI right now, nothing on the chart. I'm just following price action. So this next area it wants to go to is this red line. It wants to go to this next red line, this next area, because this is where it was previously today. So we're breaking above it. I can start to see this is where they had the massive push down. So if we can't break above here, then like let's say it starts to get rejected up here, what I could be doing is once this is getting exhausted, this run, I could start to be like a short seller up here. I can start to see now the wick coming down. I'm not taking like a sell yet, but I could anticipate a kind of pullback. I'm not going to fight this bullish momentum right now. But if I do start to see consolidation and then price break down, close below a certain support level, then maybe I could push it down to come down to here, and I could grab maybe 10, 20 pips plus coming down. But I'm not fighting a bullish momentum. I allow it to exhaust itself out. Maybe it's going to cool off again. We might get another consolidation up here. And if they continue to push it, I'll continue pushing. If not, we'll get a little bit of a retracement. Where could it retrace back to? Right back to this area. Okay, so this is now a demand zone. So this is a demand zone because price is above it. So we now need to find where's a supply zone. If I look left right here, this was a previous supply zone. So what I do is I bring this supply zone from up here, bring it to right where I'm trading, right there. Okay, see that? I'll make it red. Red is for supply, sellers. Okay, so you see how the wick now of that candle is coming right into my supply zone. So if I get into like a sell now, you could set up your chart here and you could potentially go into like a trade here. If I wanted to take a sell, where do I place? I'm not going to place my stop loss up there, but I might place my stop loss like above the previous 5-minute wick up there. And I would be waiting for confirmation to come down. And maybe it comes down to this area, but again, it's still bullish momentum right now. I'm not going to fight this. So, but I'm starting to maybe get a feel of where I want to kind of short sell this, because last time it came up here, it got rejected. It got rejected. So why wouldn't it get rejected a third time up here? You know, that's why looking left kind of tells you what could happen here. But if they break above this, that momentum breaks right through that supply zone, then it's going to come up to this area, then this area, then this area. If they can't hold it down right here, it might take multiple candles to try and hold it down. And then where would we see it come down to? We could possibly see it come back down to this area right down here. And that would be like the first support level if buyers can come back in here and take it right back up. So here's like the sell. Okay, see here where the volume closed below. Okay, so what I could do now is I start to see the price action. Okay, so I have a support level on this green candle right there. So what I'm watching for now is, can this red candle break below this support and maybe close below, and then it could come down. See how it's red now? It's got that rejection wick, and now it could come down. Here it comes down. Okay.
Okay.
But see it now drop. I kind of anticipated that quick sell there. But what I'm watching now is the volume to close below key areas, like right here. And then maybe it can continue to push down to this level. Maybe it comes back down here. Maybe it comes all the way back down into this consolidation area down here.
Okay.
You know, you're going to learn
this
is
this is one of those. This looks like an easier strategy. You know, I've been seeing all those little squiggly lines.
Yeah.
50 RSI. So this right here is enough. I don't need anything else.
This is trading price action. This is raw price action. This is, you're trading the price, you're trading support and resistance, and you're trading supply and demand, you know, but it's nice to use RSI just to give you a little heads up. Like, I don't know if it's in a, if RSI appears at 75, 80, 85, that would tell me that
the overbought and the oversell indicators, right?
Right. So then I would know that if it's 70, 75, 80 up here, then I know it's kind of overbought. But sometimes RSI traps traders, like they're hitting sells and then it continues to move out. Today was a prime example. US 30 went down to 10 on the RSI. Anytime it hits 30, 25, there's buyers always hitting buy, and then it just continued to drop. Like that's what killed a lot of traders' accounts today, if you're just a strictly RSI trader, you know. But
what about the divergence where it's doing something else?
Yeah, perfect. Yeah. So what we're looking, that's why I use RSI. Yeah, I use it to spot divergence and to help me know the momentum and the strength of the rally. But divergence, that's huge. That's what we all look for. So if price continues to make these higher highs, but the strength is going down, then how is the price going up when the strength is going down? That's telling us that it's bearish divergence. So maybe now we're waiting for candles to cool off, price action to consolidate. Like right in here, right in here, you can start to see that the price is starting to get trapped in here, like right in this little zone right here. I don't want to put too many like lines.
Okay, so
here,
by the time you say the term "I trapped it," you already calculated all of that.
So see how it's trapped in here? I had the volume. Now it's breaking below. All I need is the close of this candle. There's still 2 minutes left on it. But what I'm watching is for the close of the candle to close below there. And then what I'm looking is my continuation candle. As long as I get that volume close below there, I might get a retest candle come back up here, then selling pressure, push it down there, and then back down to there. That's what I'm looking for. So, but I need to have that red volume close below that key area for this to continue going down. If not, it might just pull back a little bit. Buyers will come and then they continue to take it back up. But this is showing you what a supply area is from a previous area. So anything above here is considered a supply.
Okay.
But it takes practice. Okay, you're not going to learn this on one call. Believe me, it takes weeks, months, years, multiple years to learn this. It takes patience, it takes discipline, but you're not trading reckless. You're trading very smart, and you can collect some pips. And once you get really good at this, then you will start to gain confidence. You'll be like, oh, I can see this all day. I can see this all day. I understand what this is, and just continue to spot this stuff. See this sell right now? So you get into the sell, your stop loss is placed up here, you're running this candle down. If it breaks below here, it wants to come down to this area. We can watch the volume of this candle where it's going to close. How much time is left on this candle here? Let me just move this out of the way. We got less than a minute, so 45 seconds. So if we can close, if this can push below here, that will be really nice. And then it will continue to maybe drop a little further. But we also have to respect that this rally was very, very bullish. Buyers could come in at any time here and rotate this right back up. But if you grab some pips on that candle right there, like we're talking 15 pips on a scale back, you know, you got your counter trading against that bullish rally. You just collected 15 pips in and out, and you just build your account like that.
Okay.
But now, like, let's watch the close, guys. We're at 8:45, so we'll go till like 9. We'll take a 15-minute break, and then we'll come back for live Tokyo trading, guys, in the Zoom. But see here, it's going to close. It will be really nice if that volume can close below. See how they gap that candle up green? Okay, so they're moving it up. There, they moved it up green, and now it could break. As soon as we break that wick right there, there it goes. There's the drop, guys. There it goes. Beautiful. So this is live. Well. What's up?
I mean that one as well.
Yeah, right. See, bro, you're making the pips, guys. Like on a webinar, you're making the money. This is a webinar. We're not even like, but I'm in the cell too. I got into it, guys. But yeah, so that's what it is, guys. But also remember, guys, like what I just told you, the overall bias is bullish. Okay, so that was like a nice little pullback. Total, if you grabbed all the way up there to there, total of 20 pips. But if you just grab like the break as it was coming down, where you anticipate that, that's where you can really get into, we'll teach you more advanced trading like that. Down to there, it was like 10, 15 pips. Now, this is the retest candle. So this is the very bullish candle coming all the way back up. So this area now, we're going to use this as resistance. If the price doesn't come back up into this box, we might get a little bit of consolidation down here, and we might get some increased selling pressure pushing it down. But that's what we're going to do. We could watch that. And this is basically what scalping is. And that was like a counter trade. Okay, you understand what counter trading is, guys? We went against the original, it was bullish, right? The US 30 was breaking out bullish. So this could have just been a small pullback, but pullbacks do turn into like structure breakdowns. And then if it breaks down here, like if this was coming down red, cooling off, and then we broke below this area, then we could potentially get a real nice sell-off down there. But yeah, guys, like I grabbed 11.5 pips out of that trade, 11.5, and I got in and out. I'll post it in the chat group, guys, just to show you guys that I am trading it with you guys.
So right now that red candle, this is live for real.
This is live. This is live, yeah.
Oh man. Okay.
We don't fool around here, Sandra. We don't fool around here. We don't play games here.
I would have. Oh my goodness, I could have been following. Wow.
Don't worry, I'm gonna run the Zoom call in about 15 minutes, guys. This is just the webinar, but
okay.
Don't worry, you guys are gonna learn a lot with us, okay?
M5. Go change that.
So like in the chat, guys, if you look, I posted it. So I got in at 34, 11, 16. So with the spread, okay, you got to factor in the spread. But I took like it where it was breaking down, and then I didn't get too greedy. When it came down there, I just exited because it's counter trading, right? So I know by trading a lot of these trades that I don't get too greedy, guys. That's the thing. Get in, get your pips. If it does break down a little bit more, no worries. But I could also grab maybe the structure breakdown down here and follow it. But do you guys understand like why maybe I was looking for a sell up there? Because, oh, there's the drop. There it is. Because I look left, and today this was a previous area where it got rejected. It got rejected. So above here is the supply zone. And this candle that broke out, yeah, it was a nice wick candle, but they pushed it back down in that supply area, and that's why we're getting these two nice bearish candles coming down. See, it's coming, could come right back down into this box. We could reverse and get buyers, push it right back up if it gets some nice demand down here. If this continues to break down here, it could fall down to this area. So that's why I highlight all of these areas, guys. So it really helps me understand. And then if price goes below here, this box will become like a supply zone. This is a demand zone, things like that. So, and then I just trade price action wherever it is, wherever it wants to go. If it goes above here, it will break out here. I'm ready for it. So like tonight, so this trade is over, but tonight, if I'm looking for something like right now on US 30, if I'm looking for a potential buy, okay, obviously we're going to look above here. If it can clear this area and it clears that wick up there, I could be looking for a potential buy up here on US 30. Then it will create a new higher high, and I could grab some pips up there. As long as this thing starts to cool off the RSI, because it had a big push. US 30, since the end of the day, it's had a big push, but it could continue maybe tonight and go up to there. But I'm waiting for volume to get back up here, close. It's got to come through that supply zone. Number one, market makers are waiting up here with ton of supply. So if we don't have enough demand, how are we going to break through that supply? Then they'll just continue to hammer this down, and it will continue to come down. But if we can start to, that was a nice, see that? That's a spin top candle. It was red, bearish, came over here. Look at where it picked up a wick, came up here. Next candle again. Now they're trying to push it down again. We got to see, can we get some buyers again in here or right here? If not, this bearish candle could engulf this wick and start to come back down here. But this area, I won't be looking for like a US 30 buy until we get that volume up there. But as price moves around and I start to see maybe it starts to cool off in here, then what I could do is I trade price action. Okay, so I follow the price. That's just originally I'm keeping the buy order up there, but if I start to see price maybe cool off in this area, I could always bring this down to here, like always get it ready. Okay, but for there, I'm just leaving it there until it breaks out of that supply zone. But the sniper trap and gap strategies, guys, it's no joke. It works. Like this is how I've been trading for years and years and years. Not only does it teach you about price action, it teaches you patience and discipline. When like, let's go to anything, any chart, guys, anything. What about Euro USD? Okay, I don't trade this too often with you guys live, but Euro USD chart. Okay, so this is Euro USD on the 5 minutes. Okay, so we see price, look at that up here. Okay, so price reaches a high, and then you start to see all of this. You got a green candle, red candle, green candle, red candle, green candle, red candle. If you box those in, like, you don't need to get if you want the entire range. Okay, that's what I mean is the entire range. Okay, there's nothing wrong with that, but you got to wait more patient. So you're taking buys with volume above here, and you're taking maybe sells with volume. There's our first bearish break. There's our break. Okay, if you miss this entire candle, that's the impulse break close. What we're waiting for is the continuation candle. We're watching this candle to see if it will come up and retest. It doesn't. It starts to go down. It drops from there to there. Like, this is a slower moving pair, but that's only 5 pips. This is an FX pair. So that's why they don't move too much, but that's kind of what you're looking for. You're looking for that volume to break, and then you get in there. It comes back and it retests the zone. See how it comes up, it gets rejected, and then they drop it down further. It comes up again. Now what are we creating, guys? We're creating a lower high. A lower high. What type of pattern do you guys see? Do you guys see a head and shoulder pattern? This is kind of like our left shoulder. This is our head. Here's the finishing off the right shoulder. There's the bearish break. As soon as it breaks those wicks, it's gone. So like your original sell, if you're holding this, now you're walking it down. You'd have your stop loss placed up there, walking it down. There's the break.
Breaking up, brother.
What's up?
Oh, sorry. I didn't know. I said it's breaking up right now.
Oh, is it? Which one? You're this Euro USD?
Yeah.
So it's it could be pulling up. So what we're looking for is, this was just previous lines from when I was charting this, but yeah, like, see how choppy it is. It's all like, this is just pre-Tokyo session, a lot of chop down here. But if you're trading this pair tonight, like, what you're looking for is, you're looking for a close above this area, then it could potentially come in up to here. This will be a big break on your Euro USD. And we can start to maybe recover, start to go up a little bit. But yeah, this is an FX pair. They don't move as fast as gold and US 30 and NASDAQ, but you can make a lot of pips off of these things, being patient and disciplined with these pairs as well. Okay, guys, so is there any questions about the trap and gap style? Okay.
So you can trap any, like, frame, like 1 hour, 2 hour, you know what I mean, like 1 day.
Everything, bro. But if you're
only do it 5 minutes.
No, you can do whatever you want. Price action, I tell you, are all the same characteristics. If you want it, like the daily, we did the daily on US 30 last night. If you were with us on when we did the forecast, I showed guys also on gold. We caught the gold breakdown like here. So see all of these daily candles right in here. See, they treat them as if they're 5-minute candles. See, they're all in here, red, green, red, green, red. Barcode. I like to call that a barcode action. If you start to see this, you trap it in. Here was our first volume break right there. So on the daily, this is kind of giving you a little bit of hope that it's going to drop down further. So what we're waiting for is the candle closed. The candle closed. So we look at where it closes. Now we look where it opens. It opens right here. We try and see if it will come back, attempt this area. It didn't. It opened, it continued bearish. As soon as we broke the low, it dropped. I could go into a daily sell, place my stop loss maybe like above this daily wick, this candle, or maybe above that box. Again, if I'm trading daily candles, you have a problem. You have a potential to make 100, 200, 300, 400. Today was like a 1,000 pip day. Today was, so you have to have a bigger stop loss. Absolutely. If you're trading daily 4-hour candles, you're not going to come in with a 10 pip stop loss. You got to come in with 30, 40 pips to make 40, 80, 100 pips. You got to give yourself that 1 to 2, 1 to 3 risk to reward. But if I start to see the volume close below, this is the first day the volume closed below this area in an entire week. So that gives me now some bearish momentum. And I could also see that the US dollar was pumping last night. So that gives an indication that the market might sell off. And then you just run this candle down. But that was all chop and gap. Same with when we did gold on the daily. We caught the gold last night on last night's call. It was right here. It was this candle, okay? I had this area highlighted right here. This was 1752. This is from last night, guys. I had it 1752, but I ended the call here. This was when the call, no, right at the end. Guys were telling me gold is dropping, gold is dropping. I saw it in the live chat after, but I stopped the call. I didn't see it, but we broke 1752. That's the daily break. And then it just came down to this wick. I told guys, watch that wick. Here's the previous one, 1745. It came 1745 and it also broke below that to 1742. But then that was a nice little drop for 100 pips. And then it started to come right back up. This is now gold right now on the daily candle. So you see here, up here, this is a supply zone now on gold for the daily. So if you guys want to know where the supply zone is, it's right here. That right there is gold's daily supply zone. We're not, you see, it came up there, rejected, came up there, rejected. Now this red candle came up a little bit and rejected. So gold could go down bearish again right now. It could, on the daily, it could start to drop and start engulfing this green candle unless buyers can step in here at the support and bring it and retest this area. But if I want to go long on gold, guys, on the daily, I would look for a buy and volume to close above this area, 1768 area, and maybe we can take it up to 1775 and ultimately back up to this area. See how I kind of treat these like 5-minute candles, but they're daily candles. But when you're trading daily candles, you have to either hold these for a few days, or you got to just get your pips in a day. If you go up 50 pips, 100 pips, 150, get in, get out, get your money, and repeat this.
That's what I pretty much did today.
Pardon?
That's what I pretty much did all day today.
Yeah, man, that's what it is.
It's pretty easy, really.
But another good thing to do is when you see a daily breakout, guys, pay attention to this. This is the way I'm going to wrap up the call, but this is very important. When you see a daily break happening, if you don't want to just hit the sell button on a daily and wait for the entire day, what you could do is as it's reaching a critical level, now what I could do is I could go to my 4-hour candles. I look at what my 4-hour candles are doing. See this? 4-hour candles rotated back up. Here's my supply zone, big bearish engulfing candle. They brought it right back up. And now see how the price is now consolidating right here. There's going to be a move. It's consolidating. It's either going to break up bullish, cool off in here, or break down bearish. If I want to get an entry here on the 1-hour candles. So now I'm coming to the 1-hour candles. So now I start to see what's going on. So I could draw like a little bit of a trend line on my 1 hours from right here to here. There's a trend line. So we might also get a trend break. If we get a trend break, there's my support level right there on the 1 hour. There it is. And what I'm looking for is I could look for a below 1760 right here. I could see an hourly fall come down to possibly 1755. Look at the hourly candles coming down. If I want to get in now to scalp this thing, I could go to my 5-minute candles right here. Let me just get this chart looking a little bit better. But here it is. gold on the 5 minutes. See where it started. See here, guys, here's a little trap. See all this shitty candles in here? Trap these candles. Okay, and carry this forward with you. There was a little bit of a breakout, but up here was another. See the supply zone, what I'm talking about, guys? Okay, so here was the resistance. Up here, I can see big resistance. So we got supply above there. This is all supply zone. Guys, when you set up these zones, it makes trading really easy. Okay, this is supply zone. Okay, so I'll go red for supply. Red up there is supply. Selling pressure. So see when these 5 minute candles, they broke out, you could scalp that, nice 5-10 pips. But what I'm watching up here is what I'm watching what's going on up here, getting rejected. Once it comes down, here's an M break. Guys, there's so much confluence here. It's unbelievable. There's an M pattern right there, back up, and then there's the break. There's the break, but not only do we get the break, what do we get? We get the volume close below that area right there. There's the volume close. Here's our retest candle. It came up, comes down, hit the sell button, break the wick, and grab some pips going down a little bit more. They brought it up. It's a lower high, push down, and a little bit more push down. Here down at the bottom, our entire webinar was on this chopping gap. You see the candles right there. You can either chop everything like that, or if you just want to get the wicks and the bodies, it's all personal preference, but you got to understand what the wicks represent. If they came down, that's an impulse break below and it came back in. There's the breakout now. Now we're getting volatility, guys. It's 9 p.m. So now it's the Tokyo session open. So we're going to get some crazy volatility, but now we got a remember this red line was my hourly trend. Now I can start to see the 5 minute candles break down. They came back to retest this trend line, the hourly trend, and they're getting rejected. So if gold continues to go bearish on this, I could look for a possible sell below here with confirmation, and I could take it down a little further. Where could I take it? Look left. This is exactly where we could take it. It can come down to here. It can come down right in here. And one more place it could come is right here. Okay. But I won't take a sell until I see some volume and break below these wicks. Then like my sell could be a little bit lower. I could bring it right down there. See it? And I just follow price action, guys. It's going to move somewhere. Just follow it.
I like how US 30 is moving because I'm still in that sell.
Oh, yeah.
I'm taking it to the zone that we had
nice
out earlier.
Let's take a look at it.
Same, bro. My first trade for the group.
I got out too early, man. I got out at 11, 12 pips. See, bro? See, guys? Yeah.
2 seconds. Let me have a little look on my chart. I got in at 34,110.
Beautiful. Beautiful. See, guys, this is a webinar and we're trading, guys, but the webinars turn into like tutorials what we're trading. So you see here what happened? It came down. This was our zone here. It broke, okay, and then now volume is pushing down. But this could be forming like a pattern, guys. Look at this. This could be like a huge head and shoulder pattern. Over here is our left shoulder. This thing could be creating our head coming down. Later tonight, we might finish off the right shoulder. And then if we break this area, US 30, it's going to be a free fall coming right back down, you know? So that's why I love trading candles and price action, guys. They tell you a story. So
Thanks, dude. Honestly, first trade and I'm like 22% up already.
Amazing, brother. Amazing. That's what we're all about, bro.
Thanks, bro.
Yep. So guys, what we're going to do is I'm going to stop the recording. We're going to take a 5-10 minute break. Just take a break, guys. I'm going to send out another Zoom link and then we're going to start our normal Tokyo session trading in the Zoom room, guys. This is what it's going to be like. Unmute yourselves, guys. We talk live. We get into trades. I break things down for you guys and let's have a good night. We'll go till like 11 o'clock. We'll go for like 2 hours. Guys, if you want to join, I know some of you around the world, if it's too much for you guys, then just join Dave tomorrow morning, get some rest. Dave will be doing the New York session tomorrow. But if you guys want to join me in the Tokyo session, you guys are welcome to come in. But I hope you guys enjoyed today's webinar on the sniper trapping gap. We'll get more into these, guys. We'll get more into these. But from now, if you guys want, just practice, back test it. if you're doing it live, if you start to see it, don't go crazy lot sizes, guys. Just trap the prices and wait for the breakout. But remember what I showed you. You can trap everything, like including the wicks, or you can just get the bodies. But if you're getting the bodies, you're going to have some wick breakouts. So that's where you got to require extreme patience, unless you see like a nice impulse candle breaking out with momentum and you have everything behind it. But that's awesome, guys.
Quick question. See where it is at the supply zone now, like where you've got it. So
Yep.
if we're in a sell and it closes above this zone now.
So this
would
is not
you
a supply
close it?
zone now, Scott. This is a demand zone. See,
This is
because
demand zone. Sorry, I
yes,
got
okay,
mistaken then.
no,
Yes,
okay.
right.
So yeah, go ahead. So this is the
So
demand zone now. Yep.
if this 5-minute candle closes above this, does
Correct.
that show that it's likely going to reverse and go back up a little
It
bit?
has a probability, yes, because it could continue this original uptrend, creating these higher
Yeah.
highs. And what this could be is, if this candle closes here, we're getting it nice demand coming in. Maybe I'll wait for like another bullish engulfing candle. But then what this could be doing is creating a higher low off of here. And then this could be just this entire could be the pullback. Then we're creating a higher low here, and we'll get some more buyers coming in to take it for the next leg back up here. But see, I'm waiting. But this was the volume came down here and got rejected. So I'm waiting. See this candle, how it opened and went down red. It might want to come down a little further, but we'll see in here. And then maybe if it wants to rotate back up, then we could get into like another buy, stop loss down below the demand zone. And then we could run it up, and then it'll come up to here. So this will be the next supply zone. So price, if it wants to come up to here, this is the supply zone. So again, if we get break above there, we break through the supply, maybe retest, then we can come up to this next major supply area. This is a huge one. If US 30 can break out of here tonight, 34,140 area, then we could attempt to come up to 176, maybe even 34,200 today. That up here could be a big move of additional 60 pips. But see here how it's rotating, really coming up, bullish engulfing. Okay. But we got to see if it will engulf this candle. But when you really get to learn this, you could get into like a sell, take your 20 pips down, you get into a buy, you follow what's going on here. Maybe it's going to come up another 5-10 pips, get your pips. If it continues to break with the volume up there, it could continue to run. But what we could also see in here is maybe these prices are going to cool off a little bit, and then we'll wait for the next move. Because the market just opened up. Tokyo session has its volatility, but we'll follow it and we'll go from there. But yeah, absolutely. So these zones, I carry them forward. If I'm going to run Tokyo and trade all the way into London session, I'll carry this forward with me as long as the price stays in this range. If it continues to break out to a new range, then what I do is I look left, and then I start to see what's happening up here. This obviously is a big time resistance zone. This is where everything got rejected today up here. And then what's above there? It's the supply zone. They needed a ton of supply, the market makers, to reverse US 30 up there today. So if it ever comes back up into this zone, like if we start to break out tonight and we're not getting greedy, like if we get that breakout, this is our next area where we're going to be thinking of taking profits or a possible reversal up there. So the markets work all on supply and demand. In here, see all this consolidation? Eventually, we might bring this across over all the way when we get into trading over there. It's always looking left, guys. You want to see what happened previous, because that's where price action can go to. That's what trading is, guys. These candlesticks tell us a story. They tell us what happened in the past. They tell us right now in the present. So it's up to us to predict what will happen in the future. That's kind of us, what we got to do as technical traders. What we got to do is we got to predict what will happen. So that's why I kind of predicted a sell. When the price was coming up there, I said it would kind of cool off, and it was reaching that supply zone. So that's why I got into that sell. I placed my stop loss up there. I was confident with that trade. I scaled out too early, guys. I thought we were going to wrap up the call, but it was 12 pips. But for you guys that grabbed like 20 pips, congratulations, but you can't get too greedy, because you have to understand the overall trend. It came up, it's pushing up. This could be the small pullback, the exhaustion, and now we could be looking for the next move coming up here. But if we see it come up, if it creates a lower high and then we get extended selling pressure, if we break this support, then it's going to come down. And then here's our next support level right in here. If we come down there, we could possibly expect some buying momentum to come up. If buying doesn't take it all the way up there, if it comes up here, a small pullback, we're looking for increased selling pressure, then we're looking to finish off that head and shoulder pattern coming down here and go into the sell. But guys, that's trading, guys. So hopefully you guys enjoyed this webinar. I'm just gonna pause the recording, guys.